Have you ever seen a company reporting these incredible, record-breaking profits, only to hear they've gone bankrupt just a few months later? It seems impossible, right? Well, the secret to understanding how that happens is tucked away in one of the most powerful yet misunderstood financial documents out there, the cash flow statement. Think of it as the ultimate lie detector for a company's health, and in the next few minutes, we're going to break it all down. So, here's our game plan. First, we'll tackle why this statement freaks so many people out. Then, we'll learn how to follow the real money. After that, we'll break down the 3 cash engines that power a business, see how it's all put together, and finally, learn how you can use this as the ultimate financial health check.
All right, let's just be honest for a second. The phrase cash flow statement sounds kind of dry, maybe a little intimidating, like you're about to get lost in a maze of numbers. But I promise you, the logic behind it is actually incredibly simple. In fact, you could argue it's the most honest, most straightforward financial statement of them all.
To really get why this is so important, let's go back to that classic business puzzle. A company is all over the news, right? They're celebrating their best year ever. Profits are through the roof. But then, just a few months later, poof, they're filing for bankruptcy. How on earth is that possible? Well, the entire answer lies in the huge difference between profit and actual cash.
It all boils down to this one single idea. Seriously, if you remember anything, remember this. A company's profit, the number you see on its income statement, includes all sorts of things, like sales made on credit where the money hasn't even come in yet. It's really just an accounting estimate. But the cash, the actual physical cash in the bank, that's a hard fact. You can't argue with it.
So to solve that bankruptcy puzzle and see what's really going on, we need a tool that cuts through all the accounting opinions and just follows the money. And that tool, my friends, is the cash flow statement.
Its job is super simple, really. It tracks every single dollar that actually came into or left the company's bank account over a certain period. That's it. It couldn't care less about a sale until the cash from that sale is actually in hand. And it doesn't care about a purchase until the bill for it is actually paid. It's all about the real, tangible flow of money.
You know, think of it this way. On one side, you've got accounting profit. It's kind of like an idea, right? It's got promises of future payments and these theoretical expenses mixed in. But on the other side, you've got the cash flow statement, which is more like a bank vault. It only cares about the real money that actually goes in and out. It's just the facts with none of the fiction. Now, to make sense of all this money moving around, the statement neatly organizes everything into 3 main categories. And the best way to think about them is as the 3 engines that power a company's cash. Okay, first you have operating activities. This is the main engine. It's the cash the company makes from its core business, selling stuff, minus the cash it pays for everyday things like rent and salaries. Second, we have investing activities. This is all about upgrading the engine room, buying or selling big, long-term things like a new factory or new equipment. And third, financing activities. This is the fuel for the engine. It's how a company gets money by issuing shares to owners or taking out loans, and of course, how it pays that money back. Now here's a little detail that trips a lot of people up, but it's super important. Any interest you receive, say from an investment, is considered part of your investing activities. Makes sense. But the interest you pay on a loan, that's considered a cost of financing your business, so it falls under financing activities. It's a small difference, but it really helps clarify where the money's actually coming from and going to.
Okay, so we've got our 3 engines: operating, investing, and financing. Now let's see how they all get put together to build the actual statement. It's a lot more like a simple recipe than you'd think. What's really clever is that the statement starts with that profit number, the opinion, and then it works backwards to find the real cash, the fact. It adds back expenses that didn't actually cost any cash, like depreciation. It adjusts for all the cash that's tied up in day-to-day business, like waiting for customers to pay their bills. Then it just totals up the net cash from our 3 engines. And here's the cool part. The final number should perfectly explain the change in the company's bank account from the beginning of the year to the end.
And this, right here, is the payoff. Understanding this statement isn't just some boring accounting exercise. No way. It's like you're giving the company a financial EKG. It lets you see the true, beating heart of the business. So what should you be looking for? Well, first and foremost, is the cash from operations positive? A company absolutely must generate cash from its main business to be healthy. Second, look at its investing. Is it spending money to grow, or is it selling off its assets just to stay alive? And finally, check the financing. Is it constantly taking on more debt, or is it strong enough to actually pay that debt back? Answering these questions tells you the real story behind the numbers. If you remember just one thing from all this, please let it be this analogy. A company's cash flow from operations is its paycheck. Simple as that. Sure, a business can survive for a little while by selling its stuff or taking on debt, just like you or I can live off savings or credit cards for a bit. But for long-term health, both a person and a company need a reliable, positive income from their primary job.
And that really brings us to the end. You now have the key to unlock a much, much deeper understanding of pretty much any business. So the next time you see a big headline about a company's amazing, record-breaking profits, you'll know to look past the hype, look past the opinion, and ask the single most important question of all: where's the cash?